this session, we're going to look at the sales daybook and the sales returns daybook and how we transfer information from those into the ledgers. Now, just to remind you, the sales daybook is where we record sales invoices that have been made on credit terms. The sales returns daybook records the sales credit notes that have been issued by the business to its customers. Now, on a regular basis, we will transfer information from these two books into the general ledger and into the sales ledger. Now, the general ledger, which is also known as the nominal or main ledger, this is where we record the transactions effects on the business's assets, liabilities, income, expenses, and capital. The sales ledger is a separate book, and in here we record the effect of transactions on the amounts that are actually owed to the business by its customers. Now, when we're recording information into our ledgers, we need to record transactions as debits or credits. And just to remind you, debits, these are records of increases in assets and expenses or decreases in income, liabilities and capital. Now, credits, they're the opposite of debits, so they record increases in income, liabilities and capital, or decreases in assets and expenses. So let's have a look at how we transfer the information from the sales daybook into the ledgers. Well, first of all, let's consider the effect of making a sale on credit terms. First of all, it's going to result in assets of the business being increased because the amount owed to the business by its customers have increased by the gross amount of the sale. Now, that would be recorded as a debit, and it would be recorded as a debit in the sales ledger control account. This is the account in our general ledger where we record and calculate how much is owed to the business by all of its customers. In addition to that effect on assets, it will also have an effect on liabilities because the liabilities of the business will have increased by the amount of VAT that's recorded on that sales invoice. That amount will have to be paid in due course over to HM Revenue and Customs. So this is an increase in liabilities, and it's going to be a debit, and it's going to be a credit, and we will credit this amount to our VAT account. And finally, there will also be an effect on income because the income generated by the business has increased by the net sales figure on the invoice. Now, this is an increase in income, so it's going to be another credit, and the amount will be credited to our sales account in the general ledger. So let's have a look at an example. On the screen at the moment, we have a sales daybook, various invoices, and we've recorded the gross, VAT and net amounts for all of them, and we've totaled them up. Now, the amount that's owed to the customers for this period has increased by 2,376. That's an increase in an asset. So that is our gross column, the total there. The total of our VAT column represents an increase in the amount of VAT owed to HMRC. So that's an increase in a liability. And the total of our net column of 1,980, that records the increase in the business's sales over the period. So that's an increase in income. So how do we transfer these totals from our sales daybook into the general ledger? Well, what we're going to look at first is a posting list. Now, a posting list is simply a summary of the entries that are going to be made in our ledgers. So when we think about the entries to be made in our general ledger, they will be as follows. Now, our postings list will be shown roughly in the format as shown on the screen. So we'll have a column where we record the account name. We'll have a column for debits and a column for credits. So first of all, the gross amount from our sales daybook will be sent to the sales ledger control account, and it'll be a debit of 2,376. The VAT column, the total there is £396, and that will be credited to our VAT account. And lastly, we have the total net sales in our sales daybook, which will be credited to our sales account. So that's £1,980. Please note that the total of our debits must equal the total of our credits when we're writing up a postings list. So let's now transfer the information from our postings list into the general ledger accounts. There are three accounts that are affected: the sales ledger control account, the VAT account, and the sales account. Now we have a debit to be made in our sales ledger control account of £2,376. We also need to put in a description next to that, and what we do here is we look at that debit of 2,376 and we ask where, in which account is the corresponding credit. In this example, we have two accounts that are credited, the VAT account and the sales account. And what we'll do is we'll record the name of the account where most of the associated credit has gone to. In this case, that account will be the sales account, so for my description I'll record sales. We'll then record the amount that's credited to our VAT account, so that's 396. And in terms of description, well, here I look for the name of the account where the corresponding debit for that £396 is recorded, and that is the sales ledger control account, so that's the description that I'll put. And lastly, we'll record the net amount of 1,980 as a credit on our sales account, and again we'll look to see where the corresponding debit was made, and that was made in the sales ledger control account, so that's the description that I'll put against this particular account. In addition to making entries in the general ledger, we will also have to make some entries in our sales ledger. Now, just to remind you, the sales ledger, this is where we record and calculate how much money is owed to the business by its individual customers. So what happens here is that we will record the gross amount from each invoice, and that is going to be debited to the appropriate customer account. Please note that the VAT and net figures from our sales daybook do not get recorded in the sales ledger. It's only the gross amounts. So let's have a look at our posting list to the sales ledger. Well, the account names are just going to be the names of our customer accounts. So Stevenson, O'Neill and Caville. And we will record the debits, the gross amounts from each of those invoices to the relevant account name. Please note that we don't summarize this. So for instance, here we've got two entries to the Stevenson account, and we're not going to merge them together into a single amount. We're going to record each separately. So when we look at the sales ledger accounts, we will have accounts for each of our credit customers, and the debit amounts will be recorded in each of the gross amounts from each invoice will be recorded separately on the debit side of each customer account. In terms of the description, we can record the actual invoice number. So we'll record the gross amount from invoices 1044, 1045, 1046 and 1047, which was a further invoice issued to Stevenson. Let's now turn and have a look at our sales returns daybook. So we'll start off by considering what effects a sales return or the issuing of a sales credit note has on our assets, liabilities, capital income and expenses. Well, first of all, our assets will have fallen, and they'll have fallen by the gross amount on the credit note that's been issued, because this represents a reduction in the amount that's owed to the business by its customer. So a reduction in the value of an asset is a credit, and this again will be recorded to the sales ledger control account. In addition to that, our liabilities will have fallen as well, because the amount of VAT will have that is owing to HM Revenue and Customs will have reduced by the amount of VAT on that sales credit note. So this represents a debit to our VAT account. And then finally, our income has fallen as well, and this has fallen by the net sales returns figure on the sales credit note. And that is going to be debited to our sales returns account. So up on screen, we've got an example of our earlier businesses sales returns daybook. So we've got credit notes to Stevenson and Caville. The gross amount is going to represents a decrease in the asset, being the amount owed by customers to the business. The VAT represents a reduction in the amount that's owed to HMRC, so a fall in a liability, and the net amount is a reduction in income. So let's have a look at the postings list that will be made in our general ledger. So we're going to credit our sales ledger control account with the gross amount from our sales returns daybook of £102. We will debit our VAT account with £17, the total from our VAT column, and we will debit our sales returns account with £85 being the total of the net column. Again, the total of your debits in a postings list must equal the total of your credits. So let's go back to our general ledger. Here we've already got the entries from our sales daybook. We're now going to record the entries from our sales returns daybook. So we will record the credit to our sales ledger control account of £102, and the description we'll put in will be the sales returns account. On the VAT account, we will record a debit of £17, and we'll describe that as sales ledger control. And on our sales returns account, we will record £85 as a debit, and again, our description will be sales ledger control. Finally, let's look at how we would transfer the sales returns daybook information into the sales ledger. So what we're going to do is take the gross amount from each sales credit note, and that will be credited to the appropriate customer account. Please remember, the VAT and net figures will not be recorded in the sales ledger, just the gross amounts. So the postings list to our sales ledger will be as follows. We will credit our Stevenson account with £30, and we will credit our Caville account with £72. So in the sales ledger, we will record credit note 101 as a £30 credit to the Stevenson account, and we'll also record credit note 102 as a £72 credit to the Cavill account.